Good morning, traders, and happy Monday to you all. It is 8 a.m. Chicago time on Monday, the 17th of July, 2023. This is episode number 2503. Let me turn down my news feeds. A quick reminder that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. How are you? Hopefully you had a very nice weekend. We're dealing with the Canadian smoke here again in Chicago. So indoor activities for the kids this whole weekend. Want to see your house get destroyed? Keep your kids in all weekend. Um, anyway, so let's just dive into this. This is episode number 2503. We're going to jump into the pre-market summary sheet from Convergent Trading. We have overall the overnight risk posture is mild risk off this morning. The Euro Stoxx 50 getting hit pretty good this morning, down 124 basis points on earnings. One of the key pieces that came across was we'll talk about this in a minute, but there's just a lot. There are maybe some three main topics that may be driving the market today. We don't know. We never know. But GDP out of China, I mean, I forget what the official definition of a recession is. If China doesn't meet that, I don't know what does. I think it's like two quarters, two sequential quarters of negative GDP, I think is one of them or something. So GDP and retail sales missed in China over the weekend. Industrial production is a little bit higher. Italian inflation is in line with expectations. And the European luxury goods stocks lower after Richemont reported a drop in America's revenue despite strong rebound in Asia. They're seeing strong demand, consumer demand in China, Macau, and a couple other places in Asia, but they're seeing worse sales in the U.S. in America in general, and this is what's reflected in Euro Stoxx 50 there. I believe they own I don't know who they own. I think they own Cartier and a couple of other major luxury brands. Correct me if I'm wrong, but the Richemont owns maybe four major top shelf luxury brands. So that's interesting. Russia, Ukraine, the Russia-Ukraine war is continuing to escalate. The main traffic bridge connecting Russia's mainland with Ukraine in Crimea got destroyed. The rail service is still up and running, but this bridge is key to resupplying troops and so on. And Russia came out and said that the attack on that bridge is a direct offensive against them. I mean, it is a war. And that they are going to let the Russia-Ukraine grain deal lapse. And so I took a quick peek at grains, especially wheat, and you can see the market anticipating this fact ahead of time. It's interesting. The markets are just so far ahead of news feeds. But it's interesting to see. This is wheat futures on a board of trade on a 5-minute chart. You can see that wheat had popped way higher earlier in the year, just massively higher, and then came right back into the point of control or value and has been sitting in value. And this news here has caused a bit of a pop higher in grains this morning. And the idea is there's likely to be a lower supply of wheat, and so we see it pushing higher as we open here. Russia seizes control of Danone and Carlsberg units. Tesla starts Cybertruck production 2 years behind schedule ahead of Q2 earnings on Wednesday. There's not much on the calendar, and while we're on the calendar, I'm going to cover what there is for the week because I like to do this on Monday. Monday's show is generally a little bit longer. I don't like to call it a show because I'm not really doing a show here. I'm just going through my process with you every morning for the last 10 years. But we have the RBA meeting minutes this evening. That's a high tier number, but at this point, it's not really relevant. Tomorrow we have the inflation rate out of Canada. We've got retail sales out of the U.S. tomorrow. That could be a driver. The inflation rate out of Great Britain on Wednesday. Building permits out of the U.S. On Wednesday as well, Wednesday morning. Then we get the inflation rate on Thursday out of Japan, and then we get retail sales. Out of Great Britain, and that wraps up the week. And then this week, the bigger thing you want to pay attention to is the is earnings. Earnings are going to be very, very key here this week. That's likely to be the driver of what's going on. I'm going to pull up my earnings. They changed the screen here, so I'm not able to see where the earnings are. But earnings is, the big mega caps are coming out this morning, and throughout the week, and that's kind of what's likely to drive the trade throughout the week. And then next week, we have the German IFO business climate for July on Tuesday, inflation rate out of Australia on Tuesday, but Wednesday is the Fed rate decision. And the Fed fund futures are still pricing in a very high probability of a hike. Here it is. This has been climbing instead of falling as we get closer. Was at 93%, now it's at 96%. So we're looking at going up from 500 to 525 basis point benchmark to 525 to 550. So we're expecting a 25 basis point hike. It's kind of baked in already. And then we skip August meeting. And then in September, they're expected to pause as of right now. We're a long way from September 20th, 2 months out. A lot can happen, and this could change dramatically based on the inputs that we're getting and how things are rolling. But for next week, this is what we're expecting. So the market's still playing the disinflation narrative, and that's why we're up at these prices. But technically, we see ourselves pushing against limitations here. The ES this morning is relatively balanced. It's got a bit of a B shape to it. The auction looks relatively balanced. Volume is quite light, 131. We were hovering between 160 and about 220,000 contracts at this point last week. This morning we're at 131. So it's showing us that it's very likely to be a pretty light day today. The position is interesting. We'll cover that in a minute. 99% of the overnight inventory is short, which means that 99% of that 131,000 traded below Friday's close. So we're using, I don't know, this is for people who've traded treasury spreads, when they say the market's two ticks bid or two ticks higher or stronger. They're always looking at where it finished the last auction, and then they compare that to what we're doing today, and the inventories look at the same thing. Essentially, for 99% of the volumes below the close, then you have a lot of short inventory that's very likely to rebalance on the open, and that's what that box means. Next, we have the range at 11.25 points. That is pretty bad. Unless we are coiling to then break out from here, which I hope we do, up higher, maybe towards the 45.50 area, the big test area from last week, or break out lower towards 4510, 4500, and then maybe down into that 4498 and 4493. That would be beautiful if we did that. But right now it's um, not looking so great. So did I say below the low? I meant if I did, I'm not sure if I did. The inventories measured versus the prior close, not the low. So it just means 99% of the volume traded below Friday's close, and therefore 99% is the inventory short. Okay, so that's where we are. Remember, we updated our stats for this week. There are your rotations. So you're looking at the S&P collapsing. It just continues to drop, where a normal rotation in the S&P is about 4.5 points. It wasn't too long ago where it was almost double that. So rotations are collapsing. The NQ rotations dropping from 37, 32, and so on, 26 last week or so, 26, 27 last week to 22. So a normal rotation is 22 points, could be as big as 22 points in the NQ, 3 points in the Russell, 32 points in the Dow, and in crude, 22 ticks. 22 ticks. So those are your rotation numbers, and this is the extreme. Remember, this is not what's common, and it's not the average. We don't like to use averages. I personally don't use anything that has an average in it at all for trading, except for v-wap, but even then it's weighted by volume, which makes sense to me. But the reason I've always been against ever since I switched to structured trading or technical trading from just being a market maker or scalper, um, I've always been against using moving averages. I don't think there's anything wrong with using them for that purpose. But when we look at stats, I don't like looking at averages because it's rare that the market is Gaussian in nature, meaning it's normally distributed, so that the average actually represents anything meaningful. In general, the market has a skew, and it's got a tail in it one way or the other. The data has a push to one side, and very often it has kurtosis, which means that it's very concentrated away from the center, and the average doesn't account for that very well. So I generally don't use the average. We like to use the mode, which we call that the point of control, and then we use the first standard deviation of range. So when you look at 64 in ES, that's not what we expect for the day. But anything up to 64 points in range, we consider that to be normal. Once we push outside of 64, what does that mean for me on a practical basis? Is that as the market's range expands beyond 64, I start to look at, okay, this is starting to stretch the bands from one standard deviation into the second standard deviation, so it may run out of steam. So you start to temper your expectations in terms of the market continuing directionally once it has that wider range. That's what that means. Anything up to 64 is normal in the ES, and anything up to 4.5 points on a 1 minute chart or smaller time range charts is considered normal. But what's common in here, let me look at what's common. For example, in the S&P, the mode, which is the most common rotation value in the S&P, is 2.75. That's the most common rotation. That's about that's what I would call the most expected. So anywhere between 3 points to 4.5 points is pretty normal in there. So just want to make sure you understand what those stats are. Stats are everything for me. Let's take a look at the charts here. We'll start out by looking at the TPO chart for the ES. So what we're looking at here is a little bit modified from what I normally show. I'm showing you the volume profile right there versus the TPO profile or the market profile. The reason I'm emphasizing market profiles. The market compresses, my viewpoint gets larger and larger. So as the market kind of starts to, volatility starts to compress, there's a strong push by most traders in my experience, including the traders who worked for me. There's a strong push to try to get down into the nitty gritty of every tick and start bid offering every tick and so on. And I feel like that's a trap. My experience is that's a trap. So what I do is I do the opposite. I expand out and I look at the bigger picture and I slow down what I'm doing. And a TPO chart or a market profile chart's based on 30-minute time frames, 30-minute bars. And so it helps me gain perspective and not overtrade and not go for these tiny tick trades. And that's why, if you're a Convergent member, you probably notice that I'm talking a lot about A bracket versus B bracket versus A bracket, D bracket versus C bracket, and so on. Those are market profile terms, and that's the origin of what I look at in terms of trading. What the market has accomplished here is it has pushed the point of control. You can see the point of control there. You see it's slowing down. You see that the trend or the tangent of this curve kind of flattening. And then the way we pushed into the 45.50, which was beautifully done on Thursday, we went to 51. Remember, I talked about from way below, I talked about where we breached 4,400. I talked about, hey, the extent of this is likely to be around 45.50 on a 19 multiple of ES earnings for the next year. So I'm looking at it from an investment point of view, and it's likely to run out of steam, at least OTF or higher time frame, bigger player steam as it pushes into the 45.50, and it did that beautifully on Thursday. Friday, we ended up opening right up against the top of the range, and we pushed higher into 45, 60, 50. But look at where we finished on Friday. Okay, Friday opened higher, tested higher. We clearly rejected these higher prices and then ended up crossing the entire value range to finish below where we were on Thursday. This is a minor thing that we're looking at. At the end of the day, we did move the point of control higher, whether it's volume, which is right there, volume to volume, it's the white line, volume to volume, or market profile to market profile. We see that we had a higher high and, more importantly, higher lows. So the one-time framing is still trending higher on the daily, but the fact that we closed lower, and it was really, if you traded on Friday or at least watched the market, you would have noticed that as it was pushing higher, there were so many, and I talked about this into 45.50 for Thursday, there is so much resting on the offer being lifted and generating these big blue dots, and then as soon as it rolls over, we have these big red dots, and it's just so much is being offered out at these prices. There's a sale going on at these prices. We see that down into the order flow as a metric, and I'll try to show you that some other charts. But as I came in yesterday to post my little bit of homework here, what I said was, I said rotations continue to shrink. So the rotations that we went through continue to shrink as the market kind of compresses. ES looks like it's putting in a rounded top. That's the slowing down of the migration of value. It closed below 45.50, our key test target in this area. We settled at 45.3675. The high on Friday is important as it might signal an intermediate top here, expecting a rounding of the high and a potential push to the MCLVN at 45.25. If we continue higher, then the idea is clearly not in place. So to me, I'm really expecting this to try to push itself back towards the 45.50 area here, but I'm expecting failure, and I'm expecting it to start to squeeze, ending the one-time frame higher, the one-time framing higher. So 31 this morning is important. The low is 28. and the expectation is it's likely to run into this 25 area. Where does the 25 come from that I talked about? That comes from the composite. So if we look at the week, here's the week. The week, this is 1 week of trading, okay? So nice little square there. And this profile here is a volume profile of that week. So we're just looking at the migration of the auction and the migration of value on a weekly basis. And what we see here is a very clear divot in this upper distribution right here at 25. So remember, we went overnight, we went to 28, we stopped right here, but there's a lot of weakness here coming into today, and I'm going to be monitoring very closely what it does at 25. So 45.25 is my line in the sand for today. If we break through the 25 and on a retest, we're not able to hold on to it and start continuing to push lower, we're looking for short side trades into 45.08 right now. 45.08. Wow, that looks like an awful 8. Jeez. 4,500. And then most importantly, let me zoom in and I'm going to destroy what I just did. Most importantly, we're moving into this support area here between 94, 98. That's a double top, right? That's close to a double top. You see where that comes from? 93, 98, multiple retests of that 93 area. That becomes the key target here. Basically, 93 to 98 is that area. So that's the key trade for today, and it's predicated on the market kind of giving up the 25s. We're pushing right up against unchanged against the settlement from Friday. There's not much for me to do this morning with this. You know, we're opening in range, we're opening against settlement. I got to sit this one out. But if it starts to attack the 45 and it bounces on a first push, it pushes into 45, it finds bids, late laggards, basically late buyers, and then they help it bounce up, and it just starts to bounce up, and then it's not able to hold on to that 45 on the way down, then that's a short for me. And as I said, I'm looking for 45.08, looking for 4,500, and then push into this 98, 93 zone, which is this double top. And that puts us into the gap zone that we left behind last week. And this area is likely to, push us right through into the 44.80. And then beneath that, we have 65 right here, and so on and so forth. This morning, if we push to settlement, if we go into settlement, and then we push down and hold the 25, and then we break the OS high, that I'm looking for pullbacks, and I'm looking for this thing to retest the high it put in on Friday. So I'm looking for it to retest the 60.50 again. It is not done to the long side. Buyers are still interested, and that would be scenario 2. So those are the two key plays for today. Okay, the delta is not giving us much this morning. When we look at the relative delta, we see that we're just, we've held v-wap, the full session v-wap through most of the session, broke to the downside, and then have held it from below, and now we're holding it from above. So we have multiple tests. So full session v-wap takes precedence today and is very important. I'm going to be watching that. And right now, it looks like it's set up. You can see it pushed right back into the zipper here. You see that collision, nice big collision. That's your top right now, okay? And if it squeezes through and gets into the prior settle, I expect it to hold that collision from the top and then try to push the overnight high at 39.25 to 45.50, and then from there, assess what's next, okay? So let's push through. Let's look at the NQ. We're going to go to the TPO chart for the NQ. NQ, same story, a weaker open on Friday and a pretty weak close. And if you look at this is the wick of a candle. The body of a candle is right down here. This entire range is a wick. And so the overnight session showed a pretty weak attempt at pushing further into Friday's body, or that wick. And I'm very, very interested in the NQ to try to squeeze into this 15,750, this 750 area, potentially to this naked point of control at 80. And then I'm looking for it to fail through and then just move right back and work through these single prints once again into settlement. And if it's not able to get any support, then the one-time framing in the NASDAQ gets terminated, and then we start to push back into the 15,350 is the distant target down below. We tested 15,350 from below, pushed through, retested, pushed higher, and I'm expecting us to pull back on a price action basis to that price for a retest. That's for NQ. Crude is already turned. Crude rejected Thursday's rally, which was huge. It was pushing into the 7,700, and it ended up closing weak, and it's continuing weaker. So crude is back at the 74 here, probably going to clean up these single prints and very likely to retest the 72 area right down here. Crude's point of control is at 72. That's the fair price for crude for the last 3 months or so. There's nothing here that tells me that momentum is likely to continue higher. I think it's pushed quite far already. We'll see what the price action says. Remember, have a plan. Let the market tell you what it wants to do. Trade the plan. Don't predict what the market's trying to do. Don't try to trade a prediction. That is a losing game. Have a plan. Let the market tell you which it's respecting, and then start trading from the side of that plan. That's what's key. Don't try to tell yourself, well, it's very likely to fall, so I'm just going to blindly get short. You don't know that. You need an indication that it's doing that as it kind of pushes through key areas, key support. Then you can define risk and put on a trade when that comes along. Don't forget to hit the like button as you leave today. Would greatly appreciate that. And then I'll catch you tomorrow morning. Take care, everyone. Mind your risk, and hopefully you'll be here tomorrow. Take care.